What was the feeling you had as you came out of the Builder Show this year?
Definitely more optimistic than I had expected. We spoke at a couple of events in mid-November, right ahead of the holiday season, and folks were very taken aback, I guess, by the rate at which mortgage rates had gone up very quickly. It was a sharp increase overall, a big impact to housing affordability, and the fact that we may just slow down for a couple of years. And that was through mid-November. But by early January, what we were hearing is that sales momentum had really picked up despite higher rates. Builders know how to sell. They're used to cyclicality in the business. They're able to buy down mortgage rates. They're able to offer price discounts or encouragement, motivation for consumers to get into the backlog, or if they're in the backlog, to stay in it. And so all of those sales initiatives were being received successfully. And even yesterday, I was in Tampa with some of the local builders. And Tampa is a very strong housing market, a lot of new families moving there because of strong job growth and high income job growth. But several of the builders I met with over the course of the day said that their traffic at the sales centers in the last 6 weeks was higher year over year, which was fascinating, and that the conversion rate was even higher, meaning these are very serious buyers. So that, I would say, the positive tone was coming out of IBS, and we were delighted to see it.
Yeah, it seems to me in a lot of the conversation that we were having that there's kind of two components of the mortgage rate increase, right? So there's a mental component and there's a mathematics component. So can I truly afford it? And can I overcome the fact that I've been used to these suppressed rates for such a long period of time? And I think we're all coming to terms with the fact that that interest rate environment is gone and it's may never return. And where we are at now is the fact that, a 5 to 6.5% rate is a healthy rate. Ideally, we can get it down, but we're going to have to make the moves we want to make. And wait, if we delay it, we're going to be delaying it not for years, not months, waiting for those rates to kind of drop back off. So.
I think with the strong employment backdrop, not just the number of jobs being created, the less unemployment than people anticipated, but also the fact that the inflation is helping income growth, that consumers are feeling strong. And so, yes, it's a higher rate, but ultimately they get to shop a little bit. Buying a home is a very big emotional decision. And for all of us in the industry coming out of COVID, housing was just so in demand, and there was so much frenzy trying to supply homes, and the buyers had to take what was available. Now they can actually haggle a bit, and I think that feels good.
Yeah. Well, you get to have a little bit more breathing room in the process, right? And everything doesn't feel so rushed. One of the things that we talked about, was mentioned in your post, we talked a little bit in the beginning of the call here, was kind of your take on innovation that was happening at the Builder Show. A lot more in the prefabrication offsite space. I think that's starting to get a louder and louder message across, a lot more awareness there. But can you just share a little bit from your perspective on what you see happening or what you observed at the Builder Show within context of offsite construction, perhaps a broader story around innovation?
Yeah, I mean, what happens when you have a slowdown is it really magnifies the opportunity for change and positive change in the business. And so we started to see that last year after 2 years of high demand. And I think already the industry had accelerated the use and the adoption of technology because necessity breeds invention. And with COVID and labor constraints and supply chain delays, we just had to figure out some new solutions. So what was very exciting to see at the show was not just the components and the structure components. We heard a lot about that, but the fact that now they're being pre-cut for MEP, mechanical, electrical, plumbing, to come right in behind them. So you're delivering a very precise framing system, very little room for error. MEP comes in behind it. And in some cases, we were also seeing structured insulation panels, SIPs, coming with the frame. And so I feel like the stick builders are doing everything they can to have more offsite components and more value add components that they can bring to the job site. We also met with several of the providers of those components and that value add, and it's being very well received by the builder customers. And I think that regardless of where the housing, the retail demand goes right now, we also have this build to rent business percolating, which is very simple, standardized houses that are often built on a even flow basis, and that the lack of complexity in the design of those houses. So because they're being built ultimately for a long-term investor to own and to manage, they have less options, less upgrades, less elevation. So they're much simpler to build. And I think that was in part the reason for so much confidence in some of the new factories that are being built for offsite solutions, which was great to see.
Yeah, no, I completely agree. And I definitely want to come back to the build to rent segment, but I want to highlight on the innovation side, one of the things that I was excited to see at the show is that the NHB seems to have really invested in giving early stage companies an opportunity to showcase these solutions. The startup zone Zone, which was introduced last year in Orlando, had a much more prominent location this year in the show amongst some legacy and established players. So the traffic count, I think, was quite high. And they gave them an opportunity to have a pitch contest in one of their jam session formats, which I think is a great way to showcase, again, these companies and give them a much lower barrier to entry to get into the show. And then, you saw many of the companies from last year take up a much larger presence, like the group from Hiarc, who had a very impressive booth that was telling a fantastic story around the digital capabilities they're trying to bring into business. So I think for me, the NHB embracing that for the show and for their attendees, I think is a great story, because 2/3 of the homes are still built by builders that are building less than 100 units a year. And it's a great way to introduce them to solutions that could be attainable for them and accessible to them as well. So I think that it's a great storyline, and prefabrication, new HVAC technologies, operations and processes, all these systems and solutions that they're showcasing, I think is super beneficial.
I agree with you, Dennis. I think the NHB is really doing a nice job, but I also think the Alliance and your team is doing a great job of facilitating all of the introductions and the communications, because what we see with a lot of the new entrants is the teams are young, they're short on funds. It's a big investment for them to get to Vegas or Orlando and put up a booth like that. And it's great that it can be such an efficient use of their time. And through the Alliance, they get to meet investors, strategic partners, clients, customers, material suppliers. And so it really, you come out of that with so many business cards and so many leads, which makes it very productive.
Yeah, no, it certainly was a great opportunity to see all those new members that we hadn't had a chance to connect with in person all at one time. I think, when you have over almost 200,000 people across the 5 concurrent shows, it's really an impressive demonstration of the interest and the time now available to explore these new ideas and concepts. And then, the conversations around how do we actually implement and what are the right partnerships. Kind of going back to what you were mentioning about your involvement in the build to rent space. So this was headline grabbing for the last 2 years. It seems to have quieted down a little bit, at least from the press perspective. Kind of curious, what are you seeing from a business activity standpoint? Is there still a lot of capital available? Are there deals being done? If they're not happening, why are they not happening?
So in terms of supply and demand, the demand is absolutely there. I think the consumer is shifting from multifamily to single family rentals. For decades, we've been building hundreds of thousands of brand new, professionally managed multifamily apartments and homes for families, but not single family. So I think the shift that we're seeing on the demand side is coming from the consumer. I think it's strong, and I think it's going to be persistent. There's no doubt in my mind that single family is going to continue to take market share from multifamily, because the attributes of those single family homes are so attractive. On the supply side, as you know, we're a boutique investment bank. We raise capital for a lot of these providers, and we have done for years, because we were doing SFR before SFR morphed into to build to rent. The capital is there, the demand is there. So with capital, you have supply. I think the challenge is the sharp increase in interest rates last year not only hit the consumer's pocket from a mortgage and affordability perspective, also the cost of capital and the cap rates for those long-term cash flowing assets. And in some cases, it got prohibitive and some of the projects went on hold. I'm kind of encouraged by it, because I feel like there was a lot of what I refer to as tourists coming into the space thinking it was easy. They're going to entitle land, develop land, spec houses, build houses, rent them out and manage them. I'm like, what could go wrong, right? And so I think a lot of the tourists have gone to the sidelines, which is good, but the real operators are still there. And it allows some of our home builder clients to shift the mix of their product from 100% retail to doing some rental as well, which from an even flow perspective and an offsite solutions perspective makes a lot of sense.
Yeah, I mean, that's the general message we have is, as the market started to soften a bit, we've had a lot more builders that were, let's say casually entertaining and exploring build to rent get much more involved, right? And I think, and you see a lot of that also happening more on the high performance side. So builders that were delivering a more energy efficient product, looking for funds that were specifically directed into them. As an example, we've seen a lot of that activity within the network. So that's interesting.